Hello everyone and welcome to my channel. This is Random Guy on YouTube. My next investment is a company called Destination XL Group Incorporated. Destination XL is a microcap company with a capitalization of $275 million and trades under the ticker symbol DXLG on Nasdaq Stock Exchange. DXLG is the leading retailer of big plus tall men's clothing and shoes, offering the most extensive assortment of brands and exclusive styles for big plus tall men. Here is a slide from the investor presentation, and they may have a point. Americans are getting bigger and the pandemic only accelerated that. During the pandemic the stores were closed, but the turnaround after that was quite impressive. The company optimized the inventory levels, streamlined its organizational structure, and renegotiated its leases. DXL has also been investing in its digital capabilities and customer loyalty program, which have contributed to its sales growth and customer retention. The e-commerce now represents about 30% of the overall business. Here is the revenue growth in blue and purple. For better fit of the exponential curve, I disregarded the periods in purple. The black exponential curve represents 3.4 compound annual growth rate, which I think is quite a realistic model that can be projected into the future. When adding seasonality, this is what we get: $133 million in Q1 2023 and $562 million for the full fiscal year 2023. For the comparison, the company itself guided for $550 to $570 million of revenue in 2023. The revenue growth is obviously quite slow, but earnings could potentially grow faster, and the company does not show signs of slowdown despite the recent economic challenges. Here are operating and gross margin in time. You can see the impressive recovery after COVID, after which especially the operating margin started to moderate. This is partially caused by customer loyalty program, which eats up some money but builds the brand and customer relationship. I expect the margins to stabilize in 2023. On the EPS chart there are quite a few peaks, some of which do not represent the company's operating performance. For example, the recent bump in earnings is just a release of valuation allowance on deferred tax assets. So don't worry, the earnings are not falling off the cliff. I estimate 16 cents per share in the next quarter and 67 cents per share for the full fiscal year of 2023. For comparison, the company's guidance for 2023 is $41 to $47 million in net income, which translates into 61 to 70 cents per share. My guesstimate is that the earnings growth will continue at roughly 12 to 13% per year. The company was unprofitable for a long time, but after COVID they turned it around and the share price recovered and topped at more than $8 in 2021. Since then, the share price dropped by 37% despite the company's strong financial performance. The current PE is at 3.3, which is quite meaningless because of the valuation allowance I mentioned before, and we can't compare it to the past anyway, since the company was mostly unprofitable. But based on my projections, the 2023 forward PE is 6.5, which is very low for a profitable growing company. The price to sales ratio is at 0.5, which is very low compared to recent history. Granted, in the past the price to sales ratio used to be much lower, but it only makes sense to value an unprofitable company very low. Now, DXLG is at much better spot. DXLG repaid the long-term debt and has a nice pile of cash on hand. The company is financially at the best spot it has ever been. The compound annual growth rate of the DXLG revenue was 3.4% in the last 10 years. Not high growth, but very stable and predictable. I think we can safely extrapolate this growth into the future and still call it conservative estimate. The company is very profitable with the 2023 forward PE of 6.5. The total addressable market of plus-size apparel is growing. The company is performing very well despite economic challenges. DXL also has a solid balance sheet. So, how is my portfolio doing? The last week was overall quite positive for the markets. All indices gained except for the Russell 2000. I think the general underperformance of small caps keeps dragging my portfolio down. Despite that, the portfolio is doing very well with $99 gain, which is basically on par with Nasdaq's $103 gain. As a reminder, these charts track S&P, Nasdaq and Russell 2000 indices as if we invested $100 into them each week, and I use them as a benchmark for my portfolio. Today I am adding $100 of shares of DXLG into my virtual portfolio for the Friday's closing price of $4.39. The full portfolio table is published at the end of the video. Now let me remind you that I am just a random guy on YouTube and not a financial advisor, and this video is not a financial advice. Despite this being only a virtual portfolio, I do own shares of DXLG in my real stock portfolio. For anyone who is still here is an average price of all of my positions X amount of weeks after the purchase. And here is the full portfolio table with each week's prices. That is all from me. Have a good day and see you next week.